Good morning. Hey, welcome to the Forex.Today YouTube channel. Please like, please subscribe. If you subscribe, you'll get notified to the live events. Today we're going to do dollar pairs, yen pairs, gold, oil, exotics, and get ready for the Fed meeting. It starts today, but the interest rate decision is tomorrow. So without further ado, let's go. So, hello, my name is Wayne McDonald. I am the Chief FX Market Strategist for TradersWay.com. Thank you very much for being a client. Namaste. If you're new to these webinars, they have charged me with the duty of helping you become a successful foreign exchange trader sooner than later, because let's just face it, there are two types of clients in the world. Most brokers are just trying to get you to pop real money into an account. Then after maybe a month or two, you'll blow through the account and you'll disappear, and they made a quick buck off you. The other way of doing it, and this is the rare thing, this is what you'll find at Traders Way, is they want you to survive and then thrive for years and years and years. And so that type of client, that premium client, if you will, is the one that can trade profitably. That could just open up a live account and trade day after day after day, week after week after week, month after month after month, year after year after year, slowly growing that account size, slowly growing that lot size. And that's the best kind of client. So there's like, how are we going to help retail traders? How do we find retail traders like that? Well, maybe you need to create them. So that's where I come in. I want to teach you what I've been doing for the last 15 years with the overriding goal of helping you get to that level. Isn't that cool? Like, if you think about it, that's cool, right? So I want you to be a success so that you're the world's greatest client to Traders Way. Now, in exchange for that, not only are they investing into your success up front, but their swaps are way better than I'd say pretty much everybody, any other broker out there, huh? Someone says no audio. I think we got audio. If you look at the swaps, you'll see that Traders Way swaps are awesome. Okay? Then what else? Customer service, world class, execution speed. I analyzed it. Now, this was years ago, maybe 4 years ago. I used some third-party software, and for the life of me, I can't remember what it was. But it did a report of the execution speed of all the major and second-tier and third-tier brokers around the world. That by execution speed, I mean you click the button and your trade gets actually put into the market, right? Traders Way is one of the fastest. And these big brokers that have 30 or 40,000 clients, what they do is they stuff them all onto the same server to save a couple of bucks. And what happens is you press the execution, or you press the button like buy, and it takes 2 or 3 seconds for it to enter. Well, by then you've lost a couple of pips. Or maybe they've gained a couple on the spread. Who knows? But lightning fast through a third-party analysis, and so many great things. So give Traders Way an opportunity to earn your loyalty and respect, huh? What's up, Barry? What's up, everybody? Good morning. Joan says no audio, huh? But everyone else is good. Right on. Video's good. Everything's good. All right, let's go. Eurozar. Look where I am. I actually was thinking about maybe trading this. Okay, to the mean, to the deviation. Now what? Well, this is Eurozar. I know you can't see it. This is Eurozar. So I only want to be short this. Hey, isn't it cool to have a bias? The cool thing about having a bias is I know one thing for sure, I can't buy it. So it takes, let's say, 50% of the potential trades away, right? So I can only sell it based on my bias. And you say, well, how come you only can sell it? Well, that's my prerogative, right? Wow, I'm going to bust out in a song on that one. My prerogative. Everybody's talking all this stuff about me. Why don't you just lend me this? Oh my God, what year is that from? I don't mean permission to make my own decisions. That's my prerogative. Wow, what is that, 1991? Anyways, I'm thinking this. Yep. Okay, so how do we put all that together? Well, I'm looking at this level for a short, and we know if this is a low standard deviation, this is the mean, then somewhere up here is the high standard deviation, right? So there's that sort of channel going. And then I'm eyeballing this for a monthly, and then I'm eyeballing this for a weekly. So I got a lot going on there. And while eyeballing all of that, I've seen this. It's not a lower low though. So here's my risk. The bulls have bought this. So somewhere around here, you got a 618 Fibonacci retracement of this move from the high to the low into this area, into this resistance area, which means my stop only needs to be about here. So I'm risking this much from here to here. I don't know how many pips that is. Let's just say it's 100 pips. But I'm going for 1,000 pips on the downside. Plus what? Interest. Oh, snap. Oh, Big Pearl said 1988? Get out of here. I was like 3 years old in 1988. Actually, that's not true. I was a teenager. But anyways, old enough to know Bobby Brown. Nice. So I want to show you this. Plus, and this is where working with Trader's Way is going to really benefit you. Eurozar, when I am short, will pay me 1,200% a year. What? Say that again. Okay. When I am short, let's see if I can actually do this. Okay, swap short. See. Okay, swap short. That times 100. If you're leveraged 101. If you're leveraged 50 to 1 in the United States, it'd be 50 to 1. If you're leveraged 40 to 1 in Europe, it'd be times 40. Okay? So, right? Anyways, so massive. So what does that mean? Let's put it in English. Let's say you put $100 of your money in your account, right? And that got you $10,000 position. Okay? That's 100 to 1 leverage. Okay? You'll get paid this interest on this. Okay? Which means if I was short this for 1 year and I risked 100, I'd make $1,200 a year in interest alone. Interest payments alone is what I would earn. What? It's sick, right? Plus the pips. So what is that? 1,200 pips. If it's $1 a pip, right? Of course, it's not $1 a pip, is it? Yeah, I guess it'd be $1 a pip. But anyways, that's pretty good, right? That's just in swap earned money every single day at rollover at 5 p.m. Eastern time. Some money gets put into your trade account. It's called income. It's like owning bonds and collecting coupon payments, except you get paid every day. You see what I mean? And so some of you new guys still probably still don't quite get what I'm talking about. So let's use this as an example. Let's look at here. Okay. Since May 9th. So it's not even August. Is it August today? No, it's not even August today. So let's say that was May 1st. May 1st to June 1st, 1 month. June 1st to July 1st, 2 months. July 1st to August 1st. So let's say it's been less than 90 days. So I'll cut a couple off. So let's say it's been 80 days. That's approximately 80 days, right? Because it's May 9th and it's not August yet, so it's not 90 days. So let's say it's 80 days. In 80 days, this one trade has earned, can anyone see that? $246. 246 bucks has been put into my account in 80 days. The thing is, to put this position in, it required me to use $100 of actual cash. Because it's it's 0.1, so it's a $10,000 position. But to put in the $10,000 position, I only needed to use $100 of my actual cash. So just in interest, in 80 days, I've earned 246 bucks in the bank, already collected on my $100. What? So let's say 80 days. So let's say times 4 is $1,000, right? Let's say I'm going to earn at least 1,000. It's going to be a little more than that, right? Per year on my $100. I think it's actually 1,200, isn't it? So I'm going to earn $1,200 a year in interest payments on a $100 investment. Just interest payments. Holy, what? I mean, come on, right? What if there was $1 billion? Right? Crazy, right? What if you built a huge portfolio that collected interest every day? Now, check this out. Remember yesterday it was $1,695? Now it's $1,823. I made 200 pips today and did nothing. Oh, not 200 pips. I earned 200 pips today, right? $200 on a mini lot. I earned 200 pips today and I did nothing. That's the other thing I'm trying to teach you. Wealth versus just pure income. I own the factory. I don't put peaches in cans, to repeat yesterday. So anyways, eye opener, newsflash, that's how you want to trade someday. Now that's one example trade that we took back in May, and right? So now what? Is that right, Alan? I would have swore it was like 5 years, honestly. Your family, Alan. That's cool, man. Honestly, I would have said 5 years. All right, so there's just an eye-opener that, you more experienced folks, you already get all of that. There's a lot of new people joining our community, and I just, from time to time, need to point that out. So how many of you trade a standard lot? If you think about that, that Euro-ZAR trade would now be $10,000. Actually, no, sorry. $18,000 on one standard lot, plus $2,500 in interest, right? That's a mini lot, guys, a mini lot. A standard lot would have $18,000 plus $2,500 in interest in 3 months. One standard lot. Like, seriously, holy schnickerschnocker. Like, chow. Think about it. Honestly, think about it. Put it in your mind. Because now we're only about 3 weeks away from going back to some serious swing trading, huh? And are you going to try to incorporate high yield? Do you want to kind of use that? We have a question here. If the role reversal is at M4, is the target M? No, it's not. Nope, you're going to need to take the training course. Plus, are you talking? Well, today's Tuesday, right? Yeah. But the answer to that is no. All right. Let's go. So this one worked out pretty okay. It was pretty close. Now where do you want to go? Well, we're still riding in the 21. If you recall, this was just sort of a breakout type trade. Okay. Beautiful swing, counter, right? Extension. And here's our current support. I think it has some vulnerability here. I kind of want this to roll this way now. And what it ends up being is probably, I'm going to say, more back into a range. Okay? So we need the Fed to cut interest rates tomorrow and tell us that they'll continue to cut. And we need oil to go up on kitty cat. Okay? Prince Philip says, do you purposely target pairs that have high yield? All right. So let's put it this way. You should have multiple accounts. You should have an account that says, I'm short Great British Pound. You should have an account that says, I'm short Japanese yen. I'll just take 2. Okay? And then lastly, you should have a high yield account. And you say, well, that's interesting, Wayne, because you're productizing your trading like a hedge fund would offer products to customers. Hedge fund. And I said, I know, because it is a hedge fund. So if you were a hedge fund, what kind of products would you offer your clients? Because remember, if you say, I'm a currency trader and I'm really good, you are not a professional. You're an amateur. You trade. I'm a trader. I like to trade. Well, if you're a trader, you work at a hedge fund, but you don't own a hedge fund. You're not you're more of you're not even a portfolio manager if you just say, hi, my name is Wayne, I'm a currency trader. Well, good for you, Wayne. Then you could say, well, I'm a currency trader. I specialize in G10 currencies using a global macro strategy. Now you're like, oh, okay. And right now, I'm moderately positive on global macroeconomics over the next 3 years. Things may change, but the macro still says generally up. It's slow and steady, and there's some risks along the way, but that's what we're trading. And therefore, I have this, and this going on. Now, if you are a professional investor, when you go to a hedge fund manager, or in this case, a hedge fund, You say, I have particular needs. I'm exposed to currency A, currency B, currency C, okay? In our normal day-to-day businesses, plus I have a mandate. I have to meet 8% on my portfolio to cover 2% inflation, to cover 5% expense growth, and to have a 1% padding. So I need you, hedge fund manager, to get me the 8, and on top of that, hedge the risk on these 3 different currencies that we do business in. Okay? And then a professional hedge fund manager would say, I got that. I got product 1, I have product 2, I have product 3, right, that I can give to you, plus I have a portfolio you can invest in. Okay, and I would recommend this at 10 times leverage. Okay, and therefore we would hit your 8% per year minimum. Okay, see? So now you got to think differently for all of that, because saying like, hey, I trade good doesn't mean anything. It's a skill. It's like chopping wood, I guess. Chopping wood's not a business. Hey man, I got a really nice axe. I got really strong shoulders, and I've split 10,000 logs. Great. Those are skills. It's not a business. Okay? So you have to have a product to make it a business. So if you chop wood, you're going to need to develop a market and customer base of people like buying your wood. Okay? Once you become good at technical analysis and fundamental analysis, you need to make yourself products. And a product is simply a bias. Tim Cook wakes up in the morning, calls his managers probably at 6 a.m. and say, how many iPhones did we sell? How many iPhones did we sell? He knows what business he's in. Okay? What's your business? Your business is your bias. Okay? So in this case, like, I know my business is I want this to go down. It's going up right now, so business isn't good. Oh, it doesn't bother me. Business will be better later. Business was great here. Business was great here. Business was slowing down here. You see the slowdown? Breach of the 21. Straight out of the textbook, guys, right? Breach of the 55. We are neutral to bearish, hunting for the 200 EMA. This is in the textbook, guys. I wrote it 14 years ago, published it 13 years ago. You might have read it 12 years ago. And I explain all of this, what all of this means. This predicts this, which predicts this. And now we're at neutral, so maybe it starts working its way down again. So what I'm talking about today is because I have a bias, right? I'm already looking for this. Much better, right? Much better. This is not a wing and a prayer type trading. Okay? This has meaning, so we need to breach this support. I'm trying to hold it below this. So what I'm hoping for is something like this, 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 this. And you can get on here, you can get on here, you can get on here. That's up to you. That's just opinion. Okay? That don't matter none. Okay? So for this, I need the Fed to cut tomorrow, and I need oil to go up. Any likelihood that would happen? Well, if the Fed cuts interest rates tomorrow, it should be a boost to the U.S. economy, which should increase demand for energy, which should increase price for oil, and a cut would lower the value of the US dollar. So yeah, I could totally get this. Thing is, do I want to do it now? Do I want to do it tomorrow? Well, tomorrow might have some volatility. So what if I can get my trade in and lock in a little stop, and maybe by tomorrow, if we're down here, I can move my stop to break even and hope the Fed volatility doesn't knock me out. It could happen, but it don't matter none if I don't lose any money. Now, you say, well, I hate breaking even. I love breaking even because I had an opportunity, right? Opportunity. I had an opportunity, and it cost me free. Well, it didn't cost me. I had to trade. I took the risk, but I removed the risk. Okay? So I had, for a while there, I had a free opportunity to either make money or not lose money. And if you think about it, if you could have that 1,000 times, a situation where you either make money or not lose money, how many of the 1,000 times are you going to make money? Well, it doesn't matter. Enough times. Okay? Dr. Drew says, hey man, what's your analysis for gold and silver against the Fed volatility? Okay? Well, once again, I'm trying to get you to think more like a portfolio manager than just simply a trader. So, I'm not thinking using gold as a hedge against volatility. It's more like, where do you want gold? And I asked you guys this several months ago. Where do you want gold to be at the end of the year? Up or down in price? And you'll see those that said up made money. Those that said down never had a chance, which is a great way to not lose money. So in this case, are you a bull? Look at this. I even drew out the arrow. How funny is that? If you're a bull, remember we did this, actually it was a week ago. We did this last Tuesday, didn't we? If you're a bull, we're simply looking at prices to buy. Okay? We're only looking at prices to buy. If you're a bull, that's it. And so where's the price? Right here. And we did it last week. So you've known for 7 calendar days your buying price. Okay? And now we're expecting what could potentially end up being a double top. Okay? Now Dr. Drew says he's a bear. Right? Bad medicine. Hey, Drew wants to be a bear. That's cool. Well, we got to get low. And then like this. Okay? Does that make sense, Drew? We got to get through the support and then trade a role reversal at a central pivot. And it'll be a 3A2 Fibonacci retracement right here. Huh? Drew says, so many hedge fund men. I don't know where you read this stuff. When people say things like that, I don't know. But anyways, I know people that buy gold by the ton. Gold by the ton. Okay? I know someone that just bought 500 kg of gold. Okay, so that's not a ton, it's a quarter ton. But, stuff like that. So gold is just money. So when someone says, oh, they dumped gold, or it's just money, guys. It's just, it goes here, and then it goes here. It goes from this person to that person, and that person to this person. Okay. Okay. It doesn't mean anything, Drew. If someone like this idea, like, let me use the word, okay, hedge fund managers dumped gold, right? Let me write a different article, okay? These hedge fund managers bought gold from these hedge fund managers. So I'll write a story about, oh my God, a whole bunch of hedge fund managers just bought gold. And then someone else said, well, they dumped it. No, dude, they didn't dump it. They sold it to these guys who bought it. They'll use it, leverage it, use it as an asset, monetize it, do whatever they need to do with it, maybe make some physical assets with it, sell the physical assets. So if these guys dumped gold, these guys bought gold. What's the difference? It just moved and they exchanged ready. Then let's say these guys bought gold and turned them into Rolex watches and then sold them at a premium of 1,000%. Let's do it this way, right? And so these guys dumped gold. These guys dumped gold. These guys bought it, turned them into watches, sold them at 1,000% increase in margins, and now they have free money. I mean, like, it just doesn't mean anything. This is why you guys need to stop reading media. It doesn't mean anything. These guys dumped gold, these guys bought gold, therefore nothing happened. And then the guys that bought gold, the reason they bought the gold is they wanted to turn it into a physical product, which they could sell to customers at a profit. Now they have free money because they bought gold from people that were dumping. It doesn't mean anything. Right? We get away, stop reading stuff. And start being a market, be in the market, be an expert at the market, okay? Okay. What do we do now? Beep. Just wondering if bulls are going to come in now. We already did that, Omit. You missed it. You'll have to watch the recording. No, Prince, not multiple brokers. You need multiple accounts. Make a product. So let's say, let's talk about it a different way. Prince, let's say you like to scalp. In fact, you like to scalp news. Okay? What's your biggest worry about scalping news events? High volatility, event-driven strategies. Manipur, we just did gold like 2 minutes ago. Spread. So you want an account that has a fixed spread. So every time, no matter what, you know how much it's going to be. And then you do spot trading. And you can either have a variable spread, or you can remove the spread and have an ECN. Okay? So let's say those are the two. And then on a strategy side, you want to carry trade. Okay? So now notice you have intention. You have intent to be a scalper. So now you're only scalp on a fixed spread account during times when your event-driven strategy is appropriate. Most of the time you trade here, and this is sort of your day trading and, and stuff like that. And I like variable. I like VAR only because I've been trading VAR longer than ECNs have been around. But and here you pay commissions, here you pay spread, whatever. Pick the one you want. Most of the time when variable spreads are lower than fixed spreads, so I go with VAR because you're not trading during high volatility moments. I'm only trading by spot trades when there's volume and volatility. And then lastly, you log into yet a third account. And the only thing you do on this account, so let's go VAR, only because that's my taste. But on this account, I log in and I'm only looking for, I only trade pairs with high yield, and I only buy the yield. So on this, let's say I can only sell like Euro Lira, Euro ZAR, for example, are two great ones. Now, right, because I'm bearish on the euro and these are high yield, I can also look at Swissy pairs. Okay. I can look at Mexican peso pairs. Okay, so on and so forth, right? David Earl says, thank you, Wayne. I am self-taught like you, but I have learned things from you that has really helped change my trading for the better. Thank you, David. I appreciate that. Craig Turner says, hey, Wayne, great stuff. Keep it up. Hey, thanks, guys. Make sure you show that by leaving comments on the recordings. Okay? Make sure you leave comments on the recordings. I'll repeat, 1,000 people a day at least watch the videos, and like 18 will leave a comment. WTF, right? So make sure you're one of the 18. Some guys, of the 18, it's almost always the same people, day after day after day, always leaving comments. So that's really cool. All right. So anyways, I'm just kind of watching this. I'm bearish on both. So not even sure why I'm watching this. But this is interesting because this is a bear zone. This is a bull zone. It's getting tight. So really, I'm watching it to see, should I be selling Swissy or should I be selling dollar? Right now, it's neutral. So let's get out of here. Okay. So now imagine you're bearish on the euro and you're going to be a portfolio manager. What does a portfolio manager do? Well, they work at a hedge fund or a bank or whatever, and they trade euro. And then very often, because it's an institution, you may not only be an expert in euro, but you have a bias built in. You are bearish euro, and someone else is bullish euro. Okay, but this is how institutions work. Because if, let's say, I'm the hedge fund manager and I bring in a client, so as a hedge fund manager, I'm a rainmaker. You're a portfolio manager. You sit your ass down every day and you trade euro. In fact, you're a euro bear. So all you do is look at euro charts, looking for opportunities to sell euro. So anyways, I'm the rainmaker. I go out, I meet a billionaire, I bring the billionaire into the office, and I'm like, okay, how can we help you, Mr. Billionaire? And he's like, well, I'm exposed a lot to euro, and I'd like to hedge that. Great. We use smart, dynamic, right, hedging strategies. And he's like, what does that mean? Well, we don't just hedge. We only hedge at the time when it's appropriate. When it's not appropriate, you would actually be losing money because you'd be making it in the cash market. So in this case, what we'll do is we won't hedge in those times. We'll only hedge when you're losing money in the cash market, right? So it's dynamic hedging and all that kind of stuff. So you're making money here, which means we wouldn't be shorting here. But when it's falling, you want to hedge that. So this is how we'll handle it. By the way, here's our euro bearish portfolio manager. This is the guy at our firm that will work for you, sir. And therefore, if you're the euro bearish portfolio manager, you walk into the office every day and you know exactly what you're doing. You're looking at euro pairs and you're looking at opportunities to sell. So you walk in today, does this look like a good sell? No. Oh, okay, I'm done. Next. I'm a euro bear. Does this look like a good opportunity to sell? Maybe. A little premature, okay, right? I understand there's a lot going on with the pound, but if I were to sell, it would be here, okay? So I probably won't sell, but I might, I could. I probably won't, but I could. There's some reason to think maybe. How about Euro ZAR? Okay, well, we just talked about it, so I'll keep this one short, but I'd say, okay, this is the right place. And on a monthly basis, this is the right place on a weekly basis. So, and I see some resistance here. Okay, I might do this one. Okay, see how easy this is when you're a portfolio manager with a bias. I'm like, okay, I might take that one. That looks interesting to me. Let's go to the next one. Euro Swissy. Okay, well, I like this area. I like this area. I like this weekly price. I like this monthly price. And there's clearly some hesitation right in this zone. So yeah, I might take this one too. See, I'm done for the whole entire day now, except for pulling the trigger. Okay. Oh, Craig says, thanks for the Euro Turkish Lira short you talked about a while back. You're up 4,000 bucks plus 450 bucks in swap. Nice. And it's only been 2 weeks. Now you got the taste of blood. Now you're a man-eating tiger. Cool. Sammy, I am restarting the swing trading group in 3 weeks. So that's when you pay money, you join the group, and we start putting all that together. Okay? Sammy says, in your past experience, when do the yen pairs become weak? Well, it's not even that, because yen pairs might not get weak, although I'm sure you guys watched the BOJ meeting last night, right? I know you did. You're a professional. So you're on top of that. And we got Fed this week as well. I know you're on top of that. So there's indications that it probably will be weak. But swing trading is more than just selling yen. That doesn't actually make any sense. You have to be a macro player. Okay, so I might look at things and say, well, I need good global macroeconomics, So I might sell yen if macroeconomics look good. I might buy oil if macroeconomics looks good. I might sell US dollar if things look good. But then looking on the bad side of things, I might sell euro because the European economy sucks. I might sell the Great British Pound because everyone in England or everyone in the UK jumped on the Titanic, and they're aiming for the iceberg. Full speed ahead! Iceberg out the port bow! Full steam ahead! They're just gonna crash their economy into the iceberg. Nice! So we'll sell that too. And what else? I might want to, over here, this is sell and this is sell. I might want to do some other macro. I might want to buy some Mexican peso. I might want to buy some lira. I might want to buy some ZAR. And this is all on good macro. Plus, bullshit economies, right? These guys just want to be punished. So, it's way too simple to say sell Japanese yen, because in a different year it may be bad macro, and I might be buying all this stuff instead of selling it. Does it matter? No. Still going to make money. Okay. So in 3 weeks, we will restart the swing trading group. And this is where we set all those up and you end up trading these like a portfolio manager. Okay? Okay, and this is where these trades typically a setup is like this. A 33 pip stop, a 333 pip limit, or profit, target. Okay, that's what these typically look like, but you might change this to 777 or 888. Okay, so we might start these trades as a regular trade, but some of these trades, I think you can expect 880 pip targets. Okay? Because we're going to be in them for 3 months. Okay? So to get in the swing trading group, you pay money, but you also have to take the swing trading course and complete it, which costs money. I'm sorry, dude. So you need the course, you need to complete the course, because I'm not teaching you how to trade in the swing trading group. So you're going to need to know how to swing trade. So if you've completed that, I will email you an invitation, then you pay yet more money to be in the group. And if you don't have any money, you're going to have to solve that problem. Why 33? I don't know. It could be 55. I don't really care. Okay. Craig, one standard deviation. That's one standard deviation. Okay. You can see it's here to here, basically. Okay. And then you take that distance, and that gets you from here to here. Okay. So keep in mind, we've been doing the swing trading group now for what, three years? Prince Philip says, why August? Seasonality. Ah, so you guys maybe didn't know this, you newer guys. Seasonality. The Forex market has multiple faces, multiple masks, if you will. So, for example, I know what I'm doing in January right now. Okay, we talked about how to trade in July back in January. we call it shooting at rabbits, right? I know how I'm going to trade in September. I'm already nervous about the third week of November. Okay? Like, I already know what I'm doing in January. I already know what I'm doing. I'm already worried about the third week of November. I knew how I was going to trade in July. I know how I'm going to trade in September, October, and November. I just don't know if I'll get the right prices and stuff. But I know what I'm looking for already. And it's because there's seasonality to Forex. So let me use an example here. You're a wheat farmer. Okay? This is wheat. You live in Swift Current, Saskatchewan, and you plant wheat. Should you plant wheat in February? Bust out your seeds. Should you plant your seeds in February? No, it's minus 40 degrees Celsius. Should you plant in August? Should you plant your seeds in August? No, it's 40 degrees Celsius, right? This is minus 40 C. This is plus 40 C. Swift Current, Saskatchewan. You're like, well, that sucks. So when should you plant your seeds? How about somewhere around the third week of April? How about that? You start seriously getting ready around the third week of April. Why? Yes, Samantha, just calm down. Give me a chance, okay? Okay. This is seasonality. When should I harvest? How about third week of September? Why? Seasonality. There are cycles in the weather. In Forex, we have cycles. We have business cycles. We have real estate cycles. We have economic cycles. We have super cycles. Okay? We have political cycles. So what did I say? We have seasonality. So let's say we have 3-month cycles. What did I say? Business cycles, 8 years. Real estate cycles, 13 years. So in here we have political cycles of 4 years. In here we have super cycles. How long is a super cycle? Is it I can't remember. 13, probably. I'd have to look it up, but it's closer to 50 years, isn't it? So anyways, you have to time all of this, right? There are patterns into this. So when someone says, why the third week of August? It's the same thing like asking a farmer, why do you plant in the third week of April? Because that's what you're supposed to do. And if you don't pay attention to that, you will starve to death. So it's amazing, like you just stumbled across something, right? When you're asking like, Wayne, why do you say things like the third week of August, or the third week of January, or the third week of November, right? Why do you say all these things? You just stumbled across something that you may have never had a chance to observe naturally, because you would have lost all your money at some point, right? And never even saw the cycles. Yeah, I have a question here. Someone installed the chart templates and stuff. is there a video on how to use them? Go to fxbootcamp.com and take one of the courses, video courses. There's probably 100 hours of training videos. So the quick answer to your question, is there one specifically because you downloaded that? Is there one how to use it? No, but there's entire training courses on how to trade, which will then teach you how to do all of that. But I will make one. It's on my to-do list. I will make one for the sort of a quick guide to using the templates. But you need to know how to trade is really what the question is, right? So like these are pretty basic. So Samantha just logged in and said, oh my God, there's so much going on here. Actually, there's not a lot going on here. These are monthly pivot points. So all you have to do is know pivot points, okay? And these are weekly pivot points. So once again, if you know how to trade pivot points, all these colors only take a bajillionth of a second to recognize. Like, why did this market reverse so dramatically right there? Because there's weekly and monthly pivots overlapped, okay? It's a cluster, see? So it's very obviously going to flip here. Cool. So if you remove, I look at it, all this takes like maybe 1 second. I look at it, okay? So when I remove pivot points, then it looks like this. Okay. Now I can use moving averages. Moving averages show me the direction and the speed in which price is moving. It was very, very bearish here, and technically speaking, stopped being bearish right here. And we are now technically speaking neutral, where the 21, 55, and 200 EMAs all equal. So we are neutral. It is not bullish, it's not bearish. Okay, cool. But I don't really need that either. But it's really cool to look at that. Like when this is going, I like to think, well, where's the 200? Okay, or this is stop selling is what this means. That's why there's a line here, right? This means stop selling. Cool. So that, but I don't really need that, right? So I've just had pivot points. Now I'm removing moving averages. So really, I think there's only two things on that chart. Okay. So now the only thing left here is price action and this linear regression. Now linear regression measures the mean and the standard deviation to the mean. I kind of like to use it, and it just reminds me of the direction we've been going, and statistically speaking are likely to continue going. And being at the mean tells me the same thing that those moving averages told me. We're neutral. It's not bullish, it's not bearish. Oh, okay, so I should hold tight, but I probably don't need that either. So now it's just price action. That's the only thing left. There's no indicator at all, and the price action tells me we're just below the sell zone. Okay, and so if I want to continue to be a bear, I'm probably looking for price action this way. So, right, we need to get a low lower than this. Let me see if I can fix this. Okay. So now this is what I'm looking for, Samantha. I want to stay below here, but I need a low lower than the previous low to confirm the lower low, lower high scenario. So this is what I'm thinking for the future. So Samantha comes in like, oh my God, there's so much going on that chart. Actually, there was really only two things. I mean, I don't typically use a linear regression, but it was there. So there was pivot points, there was moving averages, and a linear regression. I don't find that a lot. In fact, I see everything in less than 2 seconds. And I only look at what I need in the moment. So I'm like, blah, and I look at it, and I know what I want to do. Okay, so now I can go back and I can just trade with nothing. Okay, let's get rid of that. Oops. Come on now. Okay, I can get rid of this. Okay, So we can go back to this and say, this is all I need to trade. I say, well, that's true, but I have some helpful tools that by definition could help. So maybe I want a channel. I don't like channels because it doesn't tell me much. So therefore, I could use a linear regression, right? That's nice just to set a reminder. This is bearish, bro. That doesn't hurt, right? How much time does it take me to look at that? Not much. Okay? And if I wanted to use a 2155, right? I could add that, or pivot points. So anyways, I rebuild these things, and I say, I like to have monthly and weekly pivot points. That's what it'll look like. Do you know why? Let me show you why and how much time it takes. I knew at the beginning on July 1st, this was my bearish target, and this zone here was my sell zone. I knew this on July 1st. In fact, I knew this June in here. We were talking about this and down, right? That's why I like that. I knew June, let's say 25th, that was the trade plan. That's what the pivot points tell me. Okay, cool. What do the weekly pivot points tell me? Well, this is a roll reversal. This is a swing low. This is a swing low. And this was a swing low. So those are my 3 weekly swings short, which is the same, right, as the monthly. So I started with a monthly plan of I want to be short this pair. I want the entry somewhere in here, and the target is somewhere there. So that's one monthly swing. Then every week, I take the same strategy, and I say, okay, counter trend into this direction. Now, it didn't go there, but we started in the direction. Then the following week, this was my sell zone, and this is the target. Then following week, this is the sell zone, and this is the target. And then this is the sell zone this week, right? But the problem is we hit our target right here. So really, things should come to a full screeching stop until I plan the new month. And of course, I've already started planning the new month. And guess what the new month looks like? We started this on Monday. I guess that's only yesterday. But we might have talked about it last week as well. There's my sell zone for August. If this is going to continue down, it's going to continue down like this. So this information is important to me, but again, it doesn't take me very long. Okay, when I do something like I want to be a bear, so 3, 2, 1, I want to be a bear here, 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 and I want to stop being a bear there. Done! That's how long it takes me to create trade plans. And I beg you every day to make trade plans so that you know what you're doing. Are you a seller of euro? Are you a buyer of Swiss? Can you tell me why? Okay, money is leaving London and going to Switzerland. It's leaving, well, in this case, it's not London, right? So it's leaving Germany. Have you seen the German economic data? It's pathetic. Money is leaving Germany and being stuffed into Swiss bank accounts. Right? Perennial Legacy says, as much as I like Forex, if I hadn't come across your courses, I would have given up. Well, I'm glad you're here. Right? You don't want to be a short-term legacy, that's for sure. So thank you for the positive feedback on the training courses. Okay. Do you see, guys? That's why I don't think there's too many. When someone comes in and they're like, there's so much going on here. Well, I don't need it to be this much. So I forget because I'm only looking at the information I need in the moment. See, I'm only looking at this much data. This is how much I'm looking at right this second. I'm not looking at any of this right now. So none of this exists when I look at my charts. I'm only looking at that. And then I'll say, okay, that's where we are. Where's the pivot? Oh, got a pivot here and an M3 high. And then I see this, which tells me this, which means it's still technically bearish. So I want to do this. That's all I'm looking at because I know where we're going. That's why I use things like linear regressions and swing trades. See, as long as we're below this sell zone, I'm a bear. I'm going to sell, 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 sell. Okay? And everything over to the left doesn't actually matter anymore. So if it's too much, adjust your charts. Let's do that. Oops. Let's do that. And then let's do this. Okay, there you go. That's all I need. Do I need these moving averages? No. But they're not hurting me. Okay? You see what I mean? None of this is hurting me. So I go back to Samantha and I'm like, Samantha, you can delete these moving averages if you want. But I like to look at this and say the angle and separation between these two, okay, is diverging. So I'm even more bearish than I was before. And if you've read my book, you'll know that just the basic 101 type strategy is I sell hard here. I'm super ridiculously aggressive here. I am super ridiculously aggressive there. What does that mean? 5A cross down, 5A cross down. And then this, shields up, red alert. Shields up, red alert. Holy crap! Is what you should say when you see that. Now, most of you guys are just, you don't even see it. That is like, holy crap! Did you see that? Now, if you're not using these moving averages, you wouldn't even notice. You're like, roll reversal. So what does that mean? In my book, again, published 13 years ago, I think, it says in this scenario, double bottom is likely to happen. Can anyone confirm that? Can anybody confirm that this has been published? And I've probably done 1,000 videos on technical analysis. If you've watched things like timing of my trades on the FX Bootcamp YouTube channel, if you attended any of my live events back in the day, at all the conferences I used to do, I mean, all of this, you should know this. You should know this, my God, right? But Samantha, you can delete all of it. It don't matter none. You don't need it, but you should know it. I find it helpful from time to time. So I use the moving averages, but they're not required. Okay? You're not required to know swing trading strategies, but I look at this and say down right there. And I think I could put in 2 trades. I could be short one for a week and short the other one for a month. Okay? All that kind of stuff. Not necessary, but you should know that. Now, of course, there is massive risk right now because of this move. And we know something big is going on. So as I said, probably 15 minutes ago now that I've gone on this ramble. I'd like to see something like this first, and then I hardcore sell. Okay. I need a lower low, lower high, or lower low, lower high, yeah. Okay. And I'm off to the races. Why? I'll get a new 5A cross down, and then I'll sell 5A crosses down. 5A cross down, 5A cross down, 5A cross down, 5A cross down. And if you remember, I had a little line right here. What did that little line mean? Stop selling. I bet you forgot all of that, huh? Sorry for the ramble, but when someone walks in and they're like, I don't know what's going on, I'm just sticking my head in the room, but whatever you're doing, it looks like it sucks. That bugs me from time to time. So I'm just trying to say, hey, Samantha, you don't need any of this, and you can alter it any way you want, but I don't find it overwhelming. And maybe it's only because I look at it for a couple of seconds ago, right? So hopefully, Samantha, if you actually stuck around beyond the heckling, you say, oh, you know what? I'm going to give this guy another chance. I'm going to swing by 7 or 8 or 9 or times a month and just see how he's doing and be open-minded enough to listen and to maybe learn. But my guess is Samantha's not even here anymore. We'll see. It's only trading. It's funny, though, how the internet works in places like YouTube, though, right? Where you can just stick your head in a room. Hey, what are you guys doing? Ah, you suck. And then go into another room. Hey, what are you guys doing? Yeah, you guys suck. Hey, what are you guys doing over here? Forex? Forex is a scam, man. Next. What do you say to people that are like, Forex is a scam? What are you talking about? Like, what are you talking about? It's a $5 trillion a day market used by every business on the planet, every bank on the planet, every country on the planet. So anyways, right? Yeah, and it looks like Samantha's gone. So she just came in, shared her opinion that what we do sucks, and then moves on. Just amazing, right? Where's she now? Hey, Bitcoin, you guys suck. Now what? Let's go to an options trading company. Hey, you guys suck. Then what? I imagine she's actually searches. We should find someone that trades the stock market. Goes to YouTube. Live stock market trading. Oh, there's a room. Let's go in there. Hey, stock market trading people. You suck. I wonder how many rooms Samantha goes to per day. Yeah, I guess so, right, Sav? Yeah, well, you know, I could have just shut down, right? I could have just shut down, but anyways. Yeah, you can't, Kenny, you're the best. So anyways, I think it's funny. I'm laughing. I'm not upset. It's funny. I wonder how many rooms she goes to per day. Right? How does she find live rooms to go into? Like, she's probably searching, like, where can I go now? Let's do options trading. Hey, trading options is a scam. You guys suck. Your charts are horrible. Yeah. Yeah, I guess so, right? So anyways, so I love you guys because you take what we do seriously. You work really hard. You're very open-minded. You take in the lessons that I teach. I know it's hard to implement. This is a hard gig. I've never said it was easy, but at least you don't have to be self-taught. Because like we were talking about earlier, if you don't survive 5 or 6 or 7 years of sitting at your charts 12 hours a day, you'll never see things like seasonality, and you don't even know they exist. But now you know they exist. There's seasonality to what we do, and you'll say, "Oh my God, well maybe that has to do with some of my inconsistency. Why do I seem to make a lot of money in March, lose a lot of money in June, make a lot of money in September, give it all back in December?" Like, oh, maybe there's some seasonality that I never saw before, right? Right? So I hope these webinars help. Maybe they're fun from time to time, but I hope they help. I hope every day there's something that you write down, right? And that you are, if I'm showing you the path, you still have to walk down it. Some of you guys don't have any money. You just don't have any money. Therefore, you have time. And you should focus your time on the free lessons that I give you every single day and move down that path every single day. Look at our webinars as your Harvard University, and at least you have something. You have no money, but you're getting value. You see what I mean? And over time, whatever money you save to put into a trading account, like don't trade it now, save it to grow it, because at some point you will need capital. Okay? Now, other people, if you have resources, right? You're an adult, you have a job, you have savings, then look, like $1,000 saves you like 3 or 4 or 5 or 6 years of winging it on your own. And we know most people that go on their own don't make it through the first 5 years. You never see seasonality because you blow up your trading account too soon because you're on your own and you never get there. So like, what would saving your trading career be worth? Is it $1,000? Well, for less than $1,000, you get all that training at FX Bootcamp, right? Like, it's not going to make you filthy, stinking rich, but it will keep you in the game, and all of a sudden you're sharp, and you're like, suddenly you know what's going on. Now, you still have to focus on being a good trader, but you don't have to worry about or focus on figuring things out. Do I buy here? Do I sell here? What is, you're not worrying about those things anymore. You're focused on being successful, not figuring it out. You see? And all of a sudden, it's a massive game changer. Pretty soon, like, you'll very quickly realize you will be trading Forex 5 years from now. And if you can get through 5 years, right, of educational resources, daily interaction, having a coach, being mentored, all these different things get you through the first 5 years. And after 5 years, you actually now have skills and intellect as a Forex trader. So what are the next 5 years going to be like after that? Huh? So that combination, right? But getting here is, for most people, let's say if 95% of the amateur retail traders fail, let's say at least 90% fail within the first 5 years. I bet you it's actually the full 95, right? And once you get into that game, what's the next 5 to 10 years worth monetarily to you? Right? Is this 100,000 a year? Is it in years 8 or 9? Is this $1 million a year? Right? So what is it worth to get to survive and learn how to thrive through your first 5 years? Right? Right? That's what it is. And then at the end of surviving, you can trade the way I trade, you can trade some other way, but the thing is you're still in the game. Right? Someone said their YouTube name was what was it? Something legacy. You don't want to be a short-term legacy. Hey, I was a Forex trader for 3 months or for 1.5 years. I lost $5,000, but now I'm doing multi-level marketing, right? No, you don't want that. But again, if you don't have even $1,000 to invest into education or all that kind of stuff, you just don't have any money. I'm here for you every single day doing these webinars. There are training videos. I've done 4,000 videos. I'm not joking. 4,000 videos on YouTube associated with my work. You can do it. It's just going to take you longer. What I'm trying to tell you is if you only have $200 in your account and you're trying to figure out how to drive a yellow Lamborghini, spend the next 5 years teaching yourself Forex with my guidance, being here every day for you, and take a second job and grow this higher. And don't trade it now. Okay? So let's say you grow this to $2,000 or to $5,000. How about this? If you can get your account to $5,000 and you know how to trade, you show me, I know how to trade. So I'm going to open up a live account. I'm going to trade, right? I can get you another 20 grand if you want. Now you go from nothing to 25 grand. And there are several people in this room now that I've done this with. So take 2 jobs, learn as much as you can, become a good, disciplined, patient, skilled trader with a long-term vision that can set biases and create trade plans and execute them. And grow your account from $200 to $5,000. How do you do that? Take 2 jobs. Take 5 jobs. Okay? Do whatever it takes to get to $5,000, and don't do it through risk. Do it through hard work. Because when you get hard work to do it, and you then get to your opportunity of trading a $25,000 account, so it might take you 3 years to grow your $200 to $5,000. But if you do it through hard work, you will not screw up that opportunity. Why? Because you're a hard worker. If you're going to I'm going to trade my way $200 to $5,000, I'm just going to trade it. No, dude, you don't have what it takes. So don't even risk the $200. Okay? Hard work and discipline, long-term focus. Imagine now you're working 2 or 3 jobs and someone's asking you, dude, why are you working 2 or 3 jobs? Because 3 years from now, I will become a full-time foreign exchange trader. And I'm doing all these other jobs simply to bankroll myself. I need trading capital. I don't know any millionaires in my poor little town in the absolute middle of nowhere. So I'm working 2 or 3 jobs and I'm saving every penny as I learn how to trade, so that 3 years from now, I'll have enough money. And then I'm out of this little town and I'm no longer doing all these bullshit little jobs, and I am a professional, skilled foreign exchange trader. So if you have a 3 to 5 year trading plan just to get started as a Forex trader, you will make it. You will survive because you are a visionary. And I quite literally mean, if you are working hard to save your money for 3 or 5 years, you have a vision of where you'll be in 5 years, and you throw in some work ethic, you will get there. What do you think is important when you're a Forex trader? Trading money every single day. You have to have a 3 to 5 year plan and a vision for the market and have a hardcore work ethic to carry it out. So if you can't do it by saving money and working hard by taking multiple jobs, then what makes you think suddenly when you're a Forex trader, now you're going to be disciplined and now you're going to have a long-term vision? Now you're going to have a ridiculous sickening work ethic? Well, if you can't do it here, why do you expect it there? You see where I'm going? I want you to be a success, a huge, ridiculous, amazing success that could be inspirational to people around you. I want you to figure this out over the next 3, 4, 5, 6, 7 years. And maybe you'll be teaching your kids. I'm right at that spot where I'm going to start teaching my kids to trade. This is bigger than you, so don't screw it up. You see what I mean? Naomi said, I didn't get the YouTube notification. You know what? YouTube is very inconsistent. Go to twitter.com/FXBootcamp. And if you follow me there, I tweet daily reminders. As soon as I start the webinar, I tweet it. http www.twitter.com/FXBootcamp. There, I popped it in. Okay? Therefore, you'll get a tweet every day. And then when the video is posted, most days I say, hey, the video is up, so you can watch the recording. All right, so I've gone way too long today, guys. It's amazing. The less I sleep, the better the webinars get. Oh, my God. But the trading has been good. I hope you're killing it. Tomorrow is a very special day. Friday is a very special day. We got a lot going on. I hope you're watching the calendar. I need to start doing this again for you. We used to do this on a weekly basis. I need to get back in the habit. Running in circles. Come on, dude. I guess I'm running the webinar, so it's slow. Okay. So this is where we are. The red line is where we are. All this PMI stuff coming out, very important. But obviously, ADP and FOMC on Wednesday. And then, of course, on Friday is NFP, right? Right here. So if this is too much, just get rid of medium. So here's your week, right? Friday, non-farm payrolls. Thursday. Huh? Look at all the British pound news, huh? Bank of England interest rate decision. Wednesday, Fed interest rate decision. European GDP. Look at just fantastic stuff. Beautiful Aussie news. Okay, so make sure you're using all the tools that are available. Huh? We haven't done COT in a while. Maybe we'll do that on Monday. Hey, that's me right now. Good. Cool. That's me right there. Oh my God. Cool. That's neat. So yeah. So we'll try to get back in the habit. I guess I got dulled down with summer and all that. So anyways, peace on earth. May the pips be with you. I should always do this live. Peace on earth. May the pips be with you. May our profits be above average. Please subscribe. Please write a comment under the video, the recording. Make sure you leave a comment. Something like, hi, thank you, this was amazing. Or maybe like, tomorrow, can you do pound kiwi? Ask questions there. But it's important that you leave comments in the videos. And if you don't have time, just leave a thumbs up, because that takes a bajillionth of a second. It takes 30 seconds to maybe write a comment, right? So if you would do that, that would be greatly appreciated. And with that, like I said, there's 4,000 videos on YouTube associated with my work. Feel free to watch them all. There's one on the Mexican peso, how to trade it, why it works. That trade is actually coming up like right now, so maybe you should watch that. And I will see you guys tomorrow.